Just a second. Yeah. Good evening, everyone. Welcome to Currency and Commodity Research Club. This is a live show unleashing the power of commodities, covering all about bullion, energy, base metals, and more. So let's quickly start with the session. We'll start with bullion. Although the Federal Reserve recently paused its rate hike cycle for the first time in over a year, the central bank cautioned that there could be at least two more rate hikes this year, which has dampened the prospect for the gold price recovery. Because higher interest rate increases the opportunity cost for holding non-yield assets like gold, while the US dollar weakened following the Fed decisions last week. So gold has received a limited support. Market expectation currently reflects a 25 basis point rate hike by Fed in July, given the inflation remains the central bank's annual target of 2%. And the testimony by Powell before Congress on Wednesday, that is on 21st, is anticipated to provide further insight to monetary policy, with additional speeches by several other Fed officials scheduled throughout this week. So that's all for bullion this week. Technically, MCX gold has bounced back from its 100 daily moving average, which is placed near 5700, where upside resistance is at 59,670 levels. Gold would trade sideways to downside momentum within the range of 58,700 to 59,670 levels. And same with M6 silver, which is trading above 21 daily moving average, which is above 72,000 levels, below which could see a bearish momentum up to 71,180 to 7300 levels, and resistance is at 73,444 to 73,700. And in energy, global oil prices declined over 1% on Monday, reversing the gain from last week. Concern about the China economy overshadowed the impact of OPEC plus output cut and the continuous decrease in the number of oil and gas rigs in USA. And several major banks have lowered their GDP forecast for China in 2023 due to disappointment May data, indicating that flattering recovery in the world's largest economy. China is expected to cut its benchmark loan prime interest rate and roll out additional stimulus measures to support its slowing economy. And despite these challenges, China refinery uh, has reached to second highest level on record, contributing to gain in last week. So these are the factors which have supported crude last week. Technically, M6 crude in July on the daily chart has bounced back from its multiple support zone, which is near 5570 to 5500 levels. And it is trading now about 21 daily moving average, which is placed near 5878 levels, indicating for bullish momentum to continue up to 5920 to 6050 in coming session. Let's come to natural gas. Natural gas prices have experienced a significant increase last week due to underwhelming storage build and storage demand prospect. So for the entire week, the contract recorded a gain of almost 17%, which is the largest weekly percentage increase since early March. The rally was sparked by the report that EIA, which is Energy Information Administration, indicated a shortage in storage. So that's why natural gas prices had been stagnant at low levels since mid-March due to favorable weather conditions and increased production. And technically, natural gas is trading about 21 weekly moving average, which is placed at 195 levels, where immediate support you can find near 207 to 199 levels, and resistance is at 215 to 222 levels. Let's come to base metals. Copper prices are expected to maintain a range with a slight upside bias as market participants wait for further rate cut from China in the upcoming monetary policy meeting. And the focus has shifted to the diversion between the central bank and the Federal Reserve, and also the People's Bank of China currently moving in different directions. So investors are particularly anticipating that the People Bank of China announcement on the loan prime rate will be will be cut. Like they might say rate cut. So additionally, the expiration of LME options and the release of Global Purchasing Manager Index, which is PMI data this week, could introduce some volatility into the base metal prices. So last week, this coming week also, European Central Bank decisions to raise interest rate by 25 basis point is expected, along with strong US retail sales data indicates robust consumer demand and expectation of continued tightening of monetary policy by the Federal Reserve will support the base metal prices. So MCX copper June will continue its bullish momentum above 721 levels, which holds a 200 daily moving average. So above that, you can expect an upside momentum in copper. It could trade within the range 720 to 747 in this week. So thank you so much for staying updated with our latest information this week. If you find this valuable, we'll kindly request you to support by liking, sharing, and subscribing to our channel. We'll be back next week with more updates. We wish you a fantastic week ahead and sincerely thank you for your continued support. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.